So Palantir had an amazing ride for the past 2 years, going all the way from $6 to $80 in the span of 2 years, but yesterday was a complete slaughterhouse. The stock dove off a cliff, losing 8% in a single day, and today, as of the making of this video at least, the stock is still down in pre-market, so who knows when this thing stops. Now, in this video, I'll explain to you what happened, why the stock is down, and if I think the stock is going to keep coming down, where this stops, and more importantly, what my strategy is going forward with Palantir. Now, the entire market dove off a cliff yesterday. Palantir was no different. When the Fed sneezes, everybody gets wet, some more, some less. A stock that is extremely volatile and highly correlated to the market like Palantir, with a beta of almost 3, it's going to get wet a lot more than others. Now, yesterday, just to keep a long story extremely short, we had some macro data that showed that the economy is stronger than people thought, which basically leads people to think that the Fed might not cut rates at the same pace they promised to begin with, and that basically sent people to panic mode. Everybody got wet, Palantir included. But Palantir actually had some extra oomph to their drop because Cathie Wood sold some Palantir stock, and again, people freaked out. Now, in my personal opinion, Cathie Wood has as much to do with innovation, tech, and understanding of Palantir as my grandpa's balls to space travel, but that's just my own opinion. Maybe I'm completely wrong on this. I pay no attention to what she's doing with Palantir. She has a long track record of trading this stock and not long-term investing, so I don't care when she buys, I don't care what she sells. Good luck to her, good luck to her fund. It's none of my concern, but you have to understand, in a world filled with trading bots, and this news comes in, Cathie Wood sells Palantir stock, and we have macro data that's sending the entire market down, there's going to be selling pressure, extremely powerful, especially with a stock like Palantir, which is very volatile. And on top of it, we had Morgan Stanley come out and say, well, Palantir is a great company, great technology, long-term, it has a bright future ahead, but short-term, it is slightly overvalued. We expect that the stock is going to drop to the 60s. In fact, they gave it a $60 price target in what seems to be a self-fulfilling prophecy at this point because their bearish outlook, again, nudged the stock even further to the cliff, dropping it along with Cathie Wood, along with the rest of the market. And on top of it, we had, of course, Jim Cramer come out just a couple hours before the tumble started, come out and say that Palantir is the best thing since sliced bread. It's chef's kiss, and when Cramer says these things, this is what tends to happen. The man is undefeated. I'm joking, of course, no disrespect. But as a new investor, I totally understand why you might panic. I understand why you feel anxious, why you're stressed. I get it. I've been there. I understand. You haven't seen this before. All you've seen is just the stock green all day long for 2 years. I understand. You might be thinking, did I screw up? Did I make a mistake? Should have I sold earlier? Is it time to get out now and cut my losses? All of these questions are absolutely normal. So I'm not going to judge you on it. I'm not going to call you out on that. In fact, I'm going to confirm that this is absolutely normal. And even though a lot of people do not admit this, this is what most people think. And to this, I only have one answer, which is relax. Relax, my guy. Relax. Everything that's going on right now is absolutely freaking normal. Allow me to explain. You see, Palantir is what you call the high beta stock, which means that it has a very high correlation to the rest of the market. When the market is happy, just a little bit, like a little smile, like, Palantir is like, ah! The same kind of stock that behaves like this in good times when the macro data comes out and it's not great, and when there's also other negative catalysts like Cathie Wood selling and you have the Morgan Stanley stuff going on, that pushes the stock a lot further than the rest of the market. And that is the flip side. A highly reactive stock like Palantir is going to behave in an overreactive manner, upwards and downwards. And yesterday you saw an example of downwards. But it's important to remember, when in doubt, zoom out. The stock is up 320% in the past 12 months. It hasn't taken a breather in 2 years. It's okay for the stock to correct a little bit. That's fine. In fact, it may even drop further. Oh my God. Did I just say that? Yes, it may drop further because in the short term, the market can be insanely irrational, insanely unpredictable. You think of a kid that just had 5 chocolate bars and is basically running zoomies in your living room. That's the market in the short term. You don't know how bad it's going to get before it stops. Nobody knows. And if it's going to drop further, what do? Do you sell now? Do you buy now? Do you buy later? Do you wait for it to stop? Do you wait for it to come up again? I'm going to explain everything right now. Do not worry. I'm going to give you all the strategies. So first of all, you have to understand that you need to fight the panic. You need to eliminate the emotions out of your investing. And fighting the panic is the best strategy in your investing journey, and it's quite easily achievable by doing one thing and one thing only. The worst enemy of panic is logic. Once you introduce logic, panic is like one of them bullies in high school. It folds, you see, because you have to make a list. And in that list, you have to write down what inspired you, what made you start investing in Palantir, right? If you bought Palantir because the stock went up and you thought you're going to make money based on the momentum, congratulations, you have played yourself because now you have nothing to lean on. You have no conviction in the stock. You don't understand what's going on. You're freaking out. You're panicking. If the only reason you bought the stock is because you expected it's going to go up higher and now it's going down lower, well, congratulations, you're screwed. I have nothing to give you except a solid advice. My advice to you, go learn about the stock, figure out what it is you bought, and try to understand if it's a good investment long-term fundamentally. Otherwise, you're basically playing a rigged game against yourself. Now, if you made the list, and if based on that list, the fundamental reasons by which you've decided to invest in the stocks have not changed over the past 24 hours. Alex Karp is still the CEO. The profitability is still the same. The stickiness of the product is still the same. The balance sheet still looks great. Cash flow still looks great. They haven't lost a single contract. In fact, Peter Thiel is currently basically the number one phone call from the White House except Elon, right? So with all of this, I don't see anything fundamental that may cause me to doubt my initial investment. So if that is the case, right, what do? Well, you see, it's actually one of the most stupid things that people do in these sort of times. Now, today might be a slow sample size of what actually happens when the market takes a dive. When the market takes a dive and your favorite stock is down, what most people are going to do, despite what they say, despite what they promise, despite what they say in Discord, and their great commitment to conviction and buying the dip, most people, most retail investors actually sell the dip because they freak out. Everybody has a price. Everybody has a breaking point. If a stock is down 5%, they're going to say, yeah, sure, I'll DCA. I'm actually going to buy a little bit of it because it dips. I'm going to buy the dip. Then it dips another 5%. And they'll go, okay, I'll still buy the dip. And then it dips another 5%. And they go like, okay, I'll buy the dip. And then it dips another 10%. And at this point they say, well, oh my God. Maybe I've got it all wrong. Maybe Palantir is hot trash. I'm down already 25%. And then you say, well, okay, I'm going to give it one last go. And you buy it again and it's dipped another 5%. And now you're panicking and now you're fully emotional and now you're going to sell because you're in full emotional mode and you're going to sell it to people like me who are going to buy this absolutely calmly because we understand what we're getting, a huge discount on a product that only got better over the past 2 years. And then the moment you sell is the moment the market is going to flip. And you're going to be sitting in the shelf basically to fail. And that's the part I don't want to see happen. Now, I don't know what's going to happen to Palantir stock. I don't know. But there's one thing I do know. If you try and time this, if you try and say, oh my God, I want to sell now, I'm going to wait for the stock to climb back up again and I'm going to start buying again, that's not necessarily the best idea. You see, if you miss the top 10 days over a course of 20 years in the market, your returns will be slashed by half just by losing 10 days in 20 years. And you know what crazy is? Crazy is that statistically speaking, the best days usually come after the worst days. Some of the best days in the market came after the reddest, craziest days ever. Sometimes it's absolutely unpredictable. The market crashes, then the next day, boof, and you missed it. Now, the thing here is very, very simple. We've been through this, and we know exactly what's going on. In fact, it's not me even saying this. Jack Bogle has a famous video where he says that selling in a high conviction stock when the stock is heading down contradicts the whole purpose of DCA. It's moronic. It's stupid. It's not me saying it. It's Jack Bogle saying it. Now, we in the Palantir community have been through this before. It's not our first rodeo, right? You guys may not remember this if you joined the market over the past 2 years, but we bought the stock when it went public at $10. Then the stock shot up to $35. Oh my God, we're rich. Stock drops to $6. 80% of people sold to me and my friends in the Palantir community. We bought it at 6, at 10, at 12, at 15, at 20, at 25, at 30, at 35, and 40. You get the point. And now it's at 80. And now the big question is this a small temporary dip or is it a big dip? I don't know. Now, I use objective parameters that are designed to stop me from doing stupid things. I look at Palantir and I say, okay, AI is everywhere. It's taking over the world. AIP, the system of Palantir, is essentially monopolizing the operating system of AI. Clients are talking about 9 to 12 month cycles in which the software literally pays for itself, 60% faster times from insight to decision, and we haven't even talked about the fact that it is insanely oversubscribed. There are people standing in line to try and get into the door to talk to Palantir. The same thing that happened with NVIDIA on the infrastructure side is happening now on the software side. All you got to do is just talk to clients and talk to experts from the industry. They'll tell you this. I've actually done this, and I suggest you do the same. Now, if it is an overreactive market, like we're seeing right now, because of all the short-term trading that's done by bots, and my thesis has not changed about the stock, and my time horizon has not changed, which is 10 years plus. If my time horizon did not change, I don't need liquidity in the next 10 years and this money, and my thesis did not change, this is a discount and a buying opportunity for me, based on my opinion and my research. You do your research, and you do your work. It's not financial advice. I'm not telling you to buy Palantir. I'm saying I'm going to buy here because I understand that stocks don't go up in a straight line. Stocks go up and down and up and down and up and down. Eventually, they go up. And every time it goes down, I'm buying because I have high conviction in the stock, because I'm convinced that this stock is going to be huge. And that's why I see this as a discount. And if it drops another 10%, another 15%, well, everybody's freaking out. I'm going to be buying more and more. I'll talk about that in a second, how you can have enough money to buy more and more at all times. Now, how high can Palantir be in 5 to 10 years? Again, nobody really knows, but in my opinion, the floor is Salesforce, CRM, a really, really good B2B business, $300 billion company, which is 3 times higher than it is right now. So the floor, the bear case of Palantir is 3x from here in the next 5 to 10 years. Not going to complain that happens. But the ceiling, in my opinion, is somewhere around Palantir going to be the next Microsoft. And if that's the case, we're talking 10x, 20x from here, maybe even further. If that's the case, there's no point for me to get stressed out about the stock dropping from 80 to 64 or 80 to 60 or 80 to 55. It doesn't matter. It does not matter. If this is the next Microsoft, who cares? It's a discount. And that's why I'm not worried, and that's what we teach in the academy. Now, in the academy, we have a system which we implement, and it kind of goes to talk about the next stage of this, right? What's my strategy here? Well, I look at the stock going all the way to $80, setting a new 52-week high at $80. So in my head, based on the system that we teach in the academy, in my head, 20% below the 52-week high would be $64. So me and my students are looking at the price right now and saying, well, if it goes below $64, which is 20% below the 52-week high, that's a double down DCA opportunity for us based on our system. You do you. I'm just telling you my system, the one I teach. And the next question might be, well, Tom, how do you have enough money to do that? How can you double down, right? Well, that's another thing we teach in the academy. We teach you how to basically set yourself up for success, right? We teach you to do a budget. In that budget, determine how much free cash flow you have at the end of the month to invest. Invest half. The other half goes into a fund. We call it a double down DCA fund. It sits in 5%, and then when you need to deploy more cash, when a stock you invest in dips below the 20% line of the 52-week high, you take it from the double down fund. The first thing you do after this video is you make a list and you make sure that your thesis is still intact about Palantir. Number 2, you check that your time horizon is still very, very long. You don't need the money in the next year, so you don't care about short-term volatility. Then you figure out how much money you have to DCA, how much money you have to double down. You check the price to see if Palantir hits 64 or below, and then you set a DCA order that will go through automatically if it happens, and you take a walk at the beach, you watch some Netflix, you do something relaxing with zero stress and zero anxiety. Now, again, this is the stuff we teach in the academy. People have been asking me about it. We have a few more spots left. I'm going to shut it down probably in the next few days. For a couple of weeks, we need time to settle in. But if you want to join in this few days, you go to patreon.com/TomNash, you sign up for the Academy, and you watch the 40 lectures we already have in place that are saved for you to watch, that will teach you everything I talk about here and way, way deeper. 40 lessons about investing that's going to make you a better long-term investor. And plus, you get to participate in 4 lectures that we do every single month, live or recorded, your choice. And on top of that, if you join and you're not happy within 30 days, ping me, text me, DM me. I'll give you a refund and I'll send you on your way. No questions asked. That's how I'm certain of the system. I'll see you next time. Bye.